Hello everyone, I'm Wes Mirchawala, your tutor for AAA webinar selected by ACCA. The purpose of this session is to have some discussion on how to increase our chances of passing this exam. AAA is one of the paper which has a bit low pass rates. And one of the primary reason of these low pass rates is a fact that AAA exam requires a lot of practice which students usually lack. So the purpose of these sessions, which we call as practice to pass sessions, is to practice some past papers, look at some exam technique, and increase our chances of passing this exam. I have been teaching this AAA exam since last 30 attempts, and 8 of my students have secured nationwide position in this exam. So when I evaluate the students and I conduct a discussion with the students who pass this exam, who get a nationwide position, and the students who are unsuccessful, the most common thing is the element of practice. Those who pass the exam, those who go for a position, do a lot of practice as compared to the students who are unsuccessful, and the unsuccessful ones don't try any mock exam or any questions. And the major factor is that if the students do practice a question, they don't send it for review to their teacher. Until and unless you will get your questions or mock exams marked, your chances of passing will never increase. So it is very important that you attempt complete papers, you attempt complete questions, and then you send it to your tutor to get them marked so that you can have an idea that what are the errors or what are the potential issues which you might have done in your AAA exam. Okay, now if I start my discussion on AAA, the primary approach which I will be following in the coming 4 days, since it's a 4-day webinar session, we will be practicing the complete papers. And this is the basic idea of these sessions, that we have to practice to pass this exam. Okay, so we will be practicing complete exam papers of most recent 2 attempts. Now, when I will be attempting the complete paper, I will be solving it on the exam practice platform. And I'll solve it with you people like we are a student and we are solving it as a combined effort. So the most important thing which I want from you people is that you all have to respond. It should not be a one-way communication. You all should respond me on the question box and you should give me the suggested points that, okay, sir, you can write this here or you can add this point or this can be a better explanation. So what I want from you people is active participation. Now, when we will be discussing these past paper questions, we will discuss a brief concept of the topic, because my assumption is that when a student is sitting in these practice to pass sessions, is that you people have the basic knowledge of the course. Now, if I will waste my these 4 days on discussing that what audit risk is and what procedure is, it would not be that much fruitful. Greater benefit will be that we focus on the exam technique and we focus on the writing technique. So we will discuss a brief concept of the topics, not very much detail, and we will discuss the exam writing approach. Now, this is the most important thing that students don't understand, that how they have to develop an audit risk, or how they have to develop a business risk, or how they have to develop ROMM procedures, ethical issues. So we will discuss the exam writing approach, marks allocation on each of the point. Okay, and very important is time management issue. Now what the students do is that they study each of the topic, they practice the topical papers, but they don't practice the complete attempt wise papers. So they can never get a grip on the time management matter. So what I want from you people is that you people have to practice some complete papers. You have to practice some complete papers so that you people can have an idea that how the examiner ask about the complete all of the topics, how the examiner ask about the whole course. Now, once you have studied a topic and you do the question of that topic, it is very easy. But when you look at all of the topics, when you look at all of the topics and then you go for a complete exam, here is the point where the problem arises. Because you people mix up, you jungle up the exam writing technique. What my experience says is that many of the students, while doing a complete exam, they forget the exam technique, that how to write a business risk, how to write an ROMM, and they mix it up everything. They write matters to consider and audit risk in the same manner. So time management issue and dealing with complete paper is very important, is very critical. So before starting the first exam paper, the most important piece of advice for you people, the last 15 days before the exam, I want you all to do the complete attempt wise papers. Send them to your tutor, whoever your tutor is, whether you study from West Mechawala or A or B or C, from whoever you study. All tutors are good. All tutors are very good. Send them to your tutor, ask them to mark the exam for you and identify the mistakes. If in case any student want that, okay sir, we want you to mark a paper for us, then my number is 00923458099831. Okay, but my advice still would be that if you ask your own tutor, it will be much better, and obviously it will save my efforts also. But if someone is going for a private study, you people can send me. I will try and check the maximum papers. Normally in 2 days or 3 days, I respond to the students. Okay, so AAA practice to pass webinar. The key to pass is practice. Go for complete papers, get them marked, get them checked, identify your errors and improve them. Is it okay? One more important thing. Then I'll move towards a complete paper. One more important thing. When you are practicing the papers, don't practice on the simple page, because now you have to answer the paper on the practice platform. Make sure that you practice the papers on the practice platform, because some students may have slow typing speed. Some students may not be good at dealing. Some students may not be good at dealing with the software tools. So until and unless you will practice the complete papers on the software, you will not get the grip. Okay, so let's start. Now I will take you to the practice platform, because some students may not have the knowledge that how they have to go to the practice platform. So first of all, you will go to accglobal.com. You all know about the website. Okay, then you will go on the students tab and you will click on study support resources. Majority of you must have an idea that how you have to go to the practice platform, but for those who don't have an idea, I'm giving a guidance. So if you already know, then just tolerate with it. Then we will click on ACCA qualification. Then we will click on our paper, Advanced Audit and Assurance. And now we have the resources. You will click on the past papers, the CV practice platform, this tab. If you can see my mouse cursor, you will click it here. And once you will click it here, you will click on login to the practice platform. And then you will log in through your details of my ACCA. Okay, I have already logged in through my institute ID, and you will come on this page. Okay, now on the right side, you will click on Advanced Audit and Assurance. You will click on International Variant, because we are studying International Variant. You will click on ACCA Official Resources. You will click on Past Exam Library, and we are doing the most recent paper, which is AAA International, September, December 2021. Okay, you will click on assign. Okay, once you will click on assign, then you will drag down on the left side. On the left side, you will look at self-assigned material, AAA International Past and Practice Exams. And here it is, your September, December 2021 exam. And you will click on start. Okay, now we are starting the first paper. Now this is the actual software which you will see in the examination. You'll click on next, 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 because I hope you all know that there is 3 hours and 15 minutes available, and what are the tools, because normally you people have used this software in your earlier exams also. Next, next, then we have to go down, we have to go right, next. Okay, and now we click on that, yes, we want to start the exam, and here we click on next to reach the first question. Now, many students ask me this question, please listen to me. Many students ask me this question that, sir, whether we should attempt the question 1 first or we should attempt question 2 first, which question we should be attempting first. Okay, which question we should be attempting first, like we should be going for question 1, question 2, or which should be our first question. Okay, so my advice is that you should start with the question number 1. Don't think about this. Start with question number 1. But what you can do is that you can go for the requirements which are easier for you first. Like start with the question 1. If you think that any particular requirement is one which you are not good at, so you can simply leave it and you can move to second question or the second requirement. If you look at the question number 1, you think that part A is not the one which you are very good at. So, okay, skip part A, go to part B, go to part C. And the very good thing with the CV practice platform is that you can use the enter button and you can attempt any question at the start or at end. Because when you used to do at the simple page, we have to look at the sequence. But in the practice platform, it is easy. We can change the sequence at any point of time. Okay, now let's look at it. I want you all to concentrate. Now let's start with the question number 1. Okay, it is 1st July 2005. You are the manager in the audit department of McLean Company, a firm of chartered certified accountants. You are assigned to the audit of Gruber Company, which has a financial year ending 30th September 2005. Now, reading all the question is very important. Read with patience. Don't rush. Gruber Company is a new audit client of McLean Company, the audit firm, having been appointed in January 2005. The audit was previously performed by Illis Associates. Gruber Company is owned and managed by the Gruber family. Its principal operations being the design and construction of bespoke machinery used in the oil industry. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Okay, so this was some basic information which is just a reading material, so no need to worry about it. These are the important exhibits on which we'll work. Okay, now what are the list of exhibits if I go through them? Just a minute. Now, there is a partner email, an email which you have received from AI Powell, the audit engagement partner, business and governance, information and matters relevant to planning. So it's just giving you a list of the documents which you have attached, so no need to worry about it. Okay, let's read the first exhibit, which is partner's email. Now, see, it is very important that you are familiar with these tools. Okay, so I will make it bigger so it's easier for me to read it. Audit planning, to audit manager from AI Powell, audit engagement partner, subject audit planning for Gruber Company, date is 1st July 2005. Hello, I have provided you with some information which should help, which you should use to help with the planning, the audit of Gruber Company, the financial year ending 30th September 2005. As you know, Gruber Company is a new client and the firm's client due diligence and acceptance procedures were all successfully completed, I require you to prepare briefing notes for my use in which you, Part A, discuss the matters specific to the planning of an initial audit engagement which should be considered in developing the audit strategy for Gruber Company. Now I have a question from you people. Please respond. Now in Part A, he's asking the matters which are specific to initial audit planning. Now, this is not a requirement which I don't know or I haven't studied. But the important thing which you people need to learn is that this is not a routine requirement. Okay? I'm asking you people, is it a routine requirement? Do you see this requirement in every exam? Do you people see this type of requirement in every exam? So obviously the answer is no. This is one of the requirement. This is one of the requirement which is not very much routine. So now this is the point of advice. Listen to me. This is the point of advice. What I say to my students is that go for the requirements which are routine requirements, the requirements which you do normally. Okay, I am not saying that this is difficult or we'll not do this requirement. Obviously, we'll do the complete exam paper and we'll not leave anything. But this is one of the requirement which is not a very much routine requirement. So leave it for a while. Move to requirement B. Using the information in Exhibit 1, 2, 3, and 4. Evaluate the significant audit risk to be considered in planning the company's audit, 24 marks. Now I have a requirement for you people. Is it a routine requirement or it's an abnormal requirement? Audit risk is a routine requirement or it's an abnormal requirement? So it's a routine requirement. We see this type of requirement normally. So yes, I will go with this requirement at the start. Okay. Part C, design the principal audit procedures to be performed in respect of Nakatomi building, including those relating to the use of expert to provide the fair value. Now, principal audit procedures. Again, is it a routine requirement or it is something which is very difficult? It's routine, it's normal. It is one which we look normally in the papers. So now this is what I say. Don't ask me that, sir, we should go for question 1, 2, 3. Which question on first? What I say is start with the question 1 and look at the routine requirements. Look at the normal requirements. Look at the requirements which you can do in a normal pace, which are the easier targets for you. Then, using the information in Exhibit 5, discuss the ethical issues and recommend the actions. Now again, this is also very easy one. So look at it. The 24 marks, number 1, 8 marks and 8 marks. How many? These 40 marks. These 40 marks are the straightforward requirements. Now, what problem you people do? Now, by you people means those who get failed. The difference between the one who goes for a top and the one who fails or is not successful, the students go for difficult requirements at the start. Now, what you people need to understand, a very important thing I am saying. In the previous attempt, one of our students got a Pakistan top. She was my student, Kahaf Mui. She got a Pakistan top on 79 marks. Now, what you need to understand is that these 79 marks means that the one who is getting a Pakistan top is also sacrificing, losing the 21 marks. So what I say to my students, my advice, that go for difficult requirements in the end. Why not score in the easy requirements first? Okay, pick the easy ones, pick the easy requirements and take a score. Okay, now, so the requirement which we are doing at the start is the requirement B, and which says using the information in Exhibit 1, 2, 3, and 4, evaluate the significant audit risk. So I can see the first audit risk here. You people must have identified it. Now it's a new client. New client is an audit risk. You all know. Okay, new client is an audit risk. Now I have a question from you people. I want active participation. Now I can only see that only few of the students are participating. I want all of you to participate. Otherwise, I'll not enjoy teaching you people. I want you to participate. What is the audit risk if the client is new? Tell me, what is the risk if the client is new? The audit risk if the client is new. Tell me. See, the answers will start coming. The risk will be relating to opening balances. The risk will be relating to less business knowledge. Okay, less understanding of the systems in the first year. Opening balance is a very easy target to hit. Okay, now, so we will start answering. Now I will click on the briefing notes, response notes. I will click on the briefing notes and I will start developing my answer. I want you all to concentrate. Now, since it is question number one, so what you people need to understand is that there will be professional marks also. There will be professional marks also, because if you will look at the requirement tab, see on the left side. Now I have kept the space so that I can click. If you will open the requirement tab, you will look that we have to respond to the instructions in the email from audit partner. The split of mark allocation is shown in Exhibit 1, 46 marks. Professional marks will be awarded for presentation and logical flow of briefing notes, 4 marks. So since there are 4 marks for the presentation, so we will make the briefing notes. Now, how do we make the briefing notes? See, the privileges of computer-based platform. I will just copy it from here. Now learn how that we develop the briefing notes. We are attempting question number 1. Okay. Now, what I will do is that we are making the briefing notes. So I will give the heading briefing notes. And now 2. Now what I will do is just a second. Now what we are doing is that we are writing these briefing notes to our audit partner. So I will just switch the from and to tab. From and to tab. I hope that you people are understanding. Now, because since the email was all sent by AI Pavel, so we are responding to AI Pavel. Now, it was to the audit manager, so now it will become from audit manager. Okay, so I have substituted it to AI Pavel, audit partner from audit manager, subject audit planning for Gruber company, same date 1st July 2005. And now we will give the introduction. Listen to me. Introduction is in standard format in relation to audit planning. Now you just need to understand the standard format. You will just change the keywords in relation to audit planning for Gruber company, the name of company for the year end. What is the year end? What is the year end? You will go here and here you can find the year end. Just a second. For the year end 30th September 2005. Pick up the year end from here. I will go to my answer for the year ended 30th September 2005. Following information is relevant for evaluation of. Now, every time we will make this standard briefing note. The heading of briefing note. We will substitute the to and from tab, subject, date. Introduction in relation to audit planning for Gruber company for the year ended 30th September 2005. Following information is relevant for evaluation of. You will just change the name of company and you will change the year end. Now, for evaluation of. Now look at each of the requirement. Now, this was the requirement, the matters specific to the planning of an initial audit engagement, which should be considered in developing the audit strategy. just copy it and paste it here. In relation is relevant for evaluation of matters specific to the planning of an initial audit engagement, which should be considered in developing the audit strategy, comma. Now for each requirement, you will pick up the key statements so that you can develop the briefing note, comma. What is the part B? Part B is significant audit risk to be considered in planning the company audit, copy, paste, comma. Then what you will do? Again, you will go here, principal audit procedures to be performed in respect to the fair value. Again, copy, you will go here and you will paste it. And the last requirement. What is the last requirement? Ethical issues raised and recommendation of actions. Copy and paste. Now you will just read it so that if there is any grammar issue which is created because it was a requirement and now you are responding to it in relation to audit planning, Gruber Company for the year ended 30th September 2005, following information is relevant for evaluation of: number one, matters specific to the planning of an initial audit engagement, which should be considered in developing the audit strategy for Gruber Company. Good. Number two, significant audit risk to be considered in planning the company audit, comma, principal audit procedures to be performed in respect of Nakatomi building, including those relating to the use of expert to provide the fair value, and ethical issues raised and recommendation of actions to be taken by our firm. The introduction is ready. I will repeat it again. Now, some students ask me that, sir, you copy paste it from the question. Is it allowed? Yes, it is allowed. It is allowed. Okay. Yes, it is allowed. Okay. So in exam, when we can copy and paste the sentences, break into parts, what should we do with it? Now, I cannot understand your question completely. In exam, when we copy and paste the sentences break into parts. Okay, you must be saying that when we copy and paste it here, it breaks into part, then you have to use a backspace for a bit editing. But I don't think normally this happens, but it may be happening in some of the questions. Okay. So when I'm writing in briefing notes, the text is white. How to change the color of the text? Now, this do not happens with normally. I don't think that. Why are you saying that this is happening? The color issue normally do not happens. Okay, and I don't think that we have an option to change the color of the text on the briefing note. It only gets typed on the black. Okay, maybe there is some issue. You just need to close the tab and reopen it. Maybe it gets corrected then. Okay, so I will just give it a brief review because if someone has missed it and they may have got confused, then I'm repeating it. See, my purpose of these sessions is to give you people a grip on the exam technique, make you people more confident about the exam. Okay, this is very important. The most important thing which I can do in these 4 days is to give you the right way. It's to give you the confidence that, okay, yes, I can do it. Okay, so in relation to first of all, we have substituted the to and from tabs because we are responding now. Subject is same, date is same. Now we have to give an introduction. Obviously in the exam it will not take that much time because you will be doing it fast. I explain it along with it. In relation to audit planning for Gruber Company, just change the name of the company every time. Year ended, you will change the year end. Following information is relevant for evaluation. Now for each of the requirement given in the question, we copy paste the data from there and we paste it here. Okay, same applies for all of the requirements. And now our introduction is ready. Okay, now okay, let's move forward. Yes, I will discuss the topics in briefly also. I didn't say that I will not explain the concepts. I said that I will discuss the concepts briefly. I will discuss the exam technique more in detail. But what I said in the start is that I will not waste too much time in discussing the theoretical data. Because in my opinion, the AAA exam is more about exam technique rather than your knowledge. You have to go with a good technique. And it is one of the exam, if you will go and read the technical articles, the examiner has published 5 articles on exam technique. He has taught the students that how you have to draft each and every point. Okay, so at any point, if you feel that you need more help, you can ask me. I will go in that topic in detail. Okay, now let's start the requirement A. We are going for requirement 1. That is, discuss the matters to be specific in the planning of an initial audit engagement. Now, what I will do is, see, I will copy this requirement. I will copy this requirement. I will go here and now I will paste it. Okay, so this is my requirement 1, which I am attempting. Okay, now since I told you people that I will not attempt the requirement A first, I will go for other requirements first, because requirement A is not a routine requirement for us. So what I will do is I have copy pasted and created the space for requirement A. I can do it later on also. And now I am going for the requirement B. Okay, so I will come here. Now, what I will make it look like a heading. So we are evaluating the significant audit risk to be considered in planning the company audit. And here also I will make it look like in heading, matters specific to the planning. Okay, so that it looks like that we are answering the requirement. Okay, now let's start with the requirement B, which is significant audit risk to be considered. Now, I told you people that we'll be going for requirement A later on, because it is not a routine requirement. Now we are going for requirement B, which is a very easy requirement and which is significant audit risk to be considered in planning the company's audit. Okay, now before writing it down, I will talk about audit risk. Okay, I will talk about audit risk a bit, and I want you all to concentrate on it. Okay, now what is audit risk? Just a brief discussion of 5 minutes, and we will discuss the exam technique also along with it. What is audit risk? Risk that auditor may give wrong opinion. Any factor which creates a risk that auditor may give wrong opinion. Okay, now the question is that what we can include in audit risk. What are the issues which we can include in audit risk? While writing the exam answer, what are the issues which we can include in the audit risk? Listen to me. Number 1, if there is any accounting standard issues, you can discuss them. If there are any accounting standard issues, you can include them in the audit risk. Like, for example, if the management has done wrong accounting treatment for any issue, or if there is complex accounting treatment and there is a risk that the things may get misstated. Okay, so if there is any accounting standard issue, you will include them, okay, in the audit risk. What else you can include? You can include abnormal movements in financial statement in audit risk. Like if there is any ratio or thing like that which is changing abnormally, you can include that in the audit risk. Like if the sales have increased abnormally or profit margins have changed abnormally. If there is any abnormal movement in the financial statement, or if like sales, operating profit margins, if something like that is changing, so you will include that. Okay, see, I know that the formula of audit risk is inherent risk multiplied by control risk multiplied by detection risk. But I am talking in relation to the writing technique, that what are the issues which we can include in the audit risk. You can include accounting standard issues. You can include abnormal movement issues in the financial statement. You can include issues in audit risk. Like, for example, you can say that the company has a new finance director, or you can include that company has weak controls or weak reporting techniques, which can lead to a misstatement in financial statement. You can include detection issues. Now, what can be the detection issues? If there is a new auditor, there is an inexperienced audit team, or you can say that, for example, if the board of the company, the corporate governance structure is not very good, or you can discuss about the sampling risk. You can discuss about strict deadline if there is anything covered in the question. So you can refer the detection issues. So I'm giving you an advisory that what you can include in the audit risk. You can talk about accounting standard issues. You can talk about movements in FS. You can talk about control and system issues. You can talk about detection issues. Okay. So, and you can comment on the ratios. You can comment on ratio calculation. Now I'm talking about the marking. Normally, each audit risk leads to 2 marks. Normally, each audit risk is of 2 marks. But if it is an accounting issues can get up to 3 marks also. Like if you are discussing an accounting standard and you are using the accounting issues, then you can get up till 3 marks. If materiality is calculated, then additional 1 mark for each time. Each time you calculate the materiality, you will get additional 1 mark. Okay, each time you calculate materiality, you get additional 1 mark. Okay, but for materiality, you need to keep in mind that it is like maximum 3 marks. Okay, similarly, for ratios and trend calculations, okay, you will get 0.5 marks for a trend, and 1 mark for a ratio. Like for ratio is of 2 years, but trend is only calculated once. Growth in sales is a trend, but profit margins is a ratio. Okay, but for these calculations also you will get maximum 3 marks for calculations. Now, one very important thing, for commentary you will get additional 2 marks. Now, what do you mean by this? If you just calculate a ratio, you will get ratios, and these calculation thing you will get 3 marks, up till 3 marks. Like for each ratio or trend you will get 1 or 0.5 marks. Now, if you will develop a commentary, you will get additional 2 marks also. Okay. Now, one student has given a very good advice that, sir, if there is any industry related issue, is it also included in audit risk? Yes, they are regarded as inherent risk. Okay. So if there is any industry related issues, then you can also include it in audit risk. Like sometimes some businesses are cash managed, or some businesses have too much transactions in themselves. So that can create the audit risk also. Okay. So what I have done is that I've given you a brief idea that what you can include in the audit risk. You can cover, now normally there are majority accounting standard issues, but you can calculate ratios also, you can use control issues also, you can identify the detection issues also, like if it's first year of audit, or you can say that there is sampling risk, or you can say that, for example, there is new audit team, or there is lack of audit committee in the company. So these matters can create the audit risk, detection risk within audit risk, ratio calculation, industry related issues. So normally for each audit risk, you will get 2 marks. Okay. Normally for each audit risk, you get 2 marks. For accounting issues, now accounting issues can get up to 3 marks. Now for by these 3 marks, I mean for each risk. Okay, like if there are 10 accounting issues, then 10 threes are 30, you can get 30 marks also. It's not like that total accounting issues will get 3 marks. For each accounting risk, for each accounting issue, you will get 3 marks. Normally each audit risk is of 2 marks. For materiality, you get additional 1 mark each time, but maximum is 3 marks. For ratios and trend calculation, you will get 0.5 marks, 1 mark for a ratio. maximum 3 marks for calculation. Okay. Now, while writing accounting issue, listen to me. While writing accounting issue, discuss the correct accounting treatment. Listen to me. Discuss the correct accounting treatment. Comment on risk or on management treatment. If there is any risk, or if you are commenting on the management treatment, you have to cover that also. Like for example, if there is any IFRS 15 issue, so first of all, you will tell examiner that what the correct treatment is, and then you will comment on the risk or on the management treatment, that you can say that this is a very complex treatment and normally there is a risk of error. Or if management is has done something wrong, you can highlight that also. Okay, comment on risk or on management treatment. And you have to identify the heads affected. Now, what do you mean by the heads affected? You will tell that, okay, the operating expenses or advertising expenses or depreciation or intangible asset, what heads are affected, and whether they are overstated or understated, what has happened to them. Okay, and you will calculate materiality calculation if possible. If possible, you will calculate the materiality. Like if you know the amount of the risk, so you will calculate the materiality also. For normal audit risk, like if it's a general issue, you will discuss that how that issue can affect auditor's opinion. Like if it is first year of audit, you can say that due to opening balances, the overall audit opinion may get affected. Like if it is the first year of audit, you can say that one is opening balance. Second, you can say that due to lack of knowledge, we may not be able to identify the issues completely. Now, one very important thing which I want to highlight to you people at this point. Now, if you look at the recent exams, now you don't need to copy this all. I will create a Google Drive and I will share the link of the Google Drive. Okay, so you don't need to write everything. Okay, just listen to me. My words are very important. Now, one very important thing which I was about to say. If you look at the recent exam answers, listen to me. If you look at the recent exam answers, the examiner also gives an advice, a solution to audit risk identified within his point. Now, what I'm saying is, if possible, discuss the response to audit risk also in your point. Like if you are saying that there is a risk that opening balances may be misstated. So what you can do is that you can write that we will do a detailed audit, or we'll do reverse working, or we'll try and obtain the documents from the previous auditor to get a confidence on opening balances. Okay. So what the examiner do in his recent exams is that if possible, not in all risk, if possible, you can write a small response also, that in relation to this risk, I will do this. Okay. So a small list of advices before starting the requirement. What is audit risk? Risk that auditor may give wrong opinion. What we can include in the audit risk. Normally, each audit risk leads to 2 marks. For accounting issues, we can get 3 marks for each of the risks. For materiality calculation, 1 mark every time. Maximum 3 marks for materiality. For ratios and trend, you will get 0.5 marks and 1 mark. Okay. While writing accounting issue, discuss the correct accounting treatment. Okay. Now, sir, response for each risk, or we can make an overall comment. I will not advise to go for an overall comment. My advice is that while writing each of the risks, if possible, include a response for that risk there and there. I'm not saying that write a response for each one of them. Okay. I'm not saying to write a response for each one of them. What I'm trying to say is that if possible, write a response there and there. Okay. Some students are saying that, sir, I'm not able to join the WhatsApp group. My friend, please concentrate on the lecture. See, this is my number. After the class, you can send me a message and I'll be available to respond to your queries. So don't worry about it. Currently, just focus on the lecture. Okay. Now, let's come back. Let's start the discussion on the question. Okay, I think there is one more question, sir. Can 1 point from the exhibit have 2-3 audit risks? Yes, 1 point can have 2-3 audit risks. Like on one issue, there can be multiple risks also. Okay, when we'll do this actual question, you will get an idea. Is it good? So now what we are doing is we are doing the most recent exam paper and we'll do this whole paper. So when you do the whole paper, you try and use all the exam techniques together. Okay, now let's go back to the question screen. Now we are writing significant audit risks to be considered in planning the company's audit. Okay, now when we were reading the question, we had identified it here that if you people remember, this my camera comes in between screen. Just a second. Now, I have provided you with some information you should use to help you planning the audit of Gruber Company for the financial year. As you know, Gruber Company is a new client. Okay, so since it is a new client, so this is an audit risk. There is a risk of opening balances. There is a risk of lack of understanding. Okay, so let's develop this risk. Okay, let's develop this risk. The first risk is new audit client, or you can write it like it's first year of audit. You can write new audit client or first year of audit. Now, our firm will be auditing Gruber Company for the first time. Will be auditing the Gruber Company for the first time in year ended 30th September 2005. Okay, first we identify the fact from the question. Okay, our firm will be auditing Gruber Company for the first time in year ended 30th September 2005. It creates a risk for auditor as due to lack of knowledge of business and environment of Gruber Company, our firm may not be able to identify issues in business and financial statements effectively. Okay, further in first year of audit, there is an issue in relation to opening balances also, as they were not audited by our firm. See, now the very important thing which I want you people to highlight here is that don't idealize yourself from the examiner answer. The examiner answer is a guideline. Read it and try to cover those points and write them in easy language. Don't frustrate yourself or don't make yourself stuck in using very hard language or hard wordings. The examiner knows that you are a student. He values your identification and he values your explanation. Yes, the writing wordings do matter, but it is not like that if you're not writing very professionally, you will not get marks. You have to write with reasonable professionalism. You don't need to write like a writer. The answer which you read of the examiner is written by a writer. It is very phrased in very beautiful words. But for you, you are doing it in exam pressure. So just try and cover the points. So our firm will be auditing Gruber Company for the first time in year ended 30th September 2005. It creates a risk for auditor, or you can write for us, as due to lack of knowledge of business and environment of Gruber Company by our firm, due to lack of knowledge and environment of Gruber Company, our firm may not be able to identify issues in financial statement effectively. Further, in first year of audit, there is an issue in relation to opening balances also, as they were not audited by our firm. If any issue exists in opening balance, then it may get carry forward and affect the current year financial statements also. Okay. Now this is the sufficient risk. This is the normal risk. You identified and you commented on 2 points. You commented on lack of knowledge, which we have in the first year, and you commented on the opening balance issue. But listen to me. If you give some advice, it will make your point more valuable. Now, what type of advice you can give? Our firm can do a detailed audit and take a greater deadline considering issues of first year audit. This will reduce the audit risk to acceptable level. Now see, I have a question from you people. Did I use any technical thing? Did I use any technical approach? I wrote in such a simple manner. Okay, I wrote like I'm a student and I'm doing it in the exam. Okay, now the most important problem, the most important issue which you people do is that you people get in exam stress. You try to impress the examiner by using the difficult words. Yes, good words and good presentation do matter, but at a cost of leaving 15 marks in the exam, I don't advise it. What I give advice to my students is that what you people should do and understand is that try and cover the points, maybe in easy wordings, but try and cover the points and give examiner a good explanation. Okay. Now, one student has asked me that, sir, is it necessary to cover 2 issues in one risk every time? No, that is not necessary. Okay, that is not necessary. Okay, since in first year of audit, these 2 issues are very common, so I covered it. But normally we don't need to comment on 2 issues every time. Okay. Now some students have asked the question. I try and answer the questions publicly so that everyone can learn. So we should write audit risk and response, my friend. I think that you didn't listen to me carefully. I wrote it here. If possible, discuss the response to audit risk in every point. If it is possible, not mandatory, because in the recent exam answers, we look at the examiner approach that he writes the responses also. So if possible, try and cover the response in every risk, but not like it's mandatory requirement. Okay. So writing our firm is allowed, or is better to write the company's name? No, you can write the word like our firm, because we are the audit manager and we are writing it to our partner. So you can use the word our firm. There is no issue in it. Okay. Now, one student has asked a very good thing that says the point includes 2 to risk. Then will we score 4 marks? No. This whole paragraph will give you 2 marks. The point includes 2 impacts. The risk is 1, that it is first year of audit. Okay. Now, one student has asked me, sir, it is written that due diligence is performed. How it will impact on audit risk? I'm responding to you. Listen to me very carefully. Now, here the word due diligence is performed means that client acceptance procedures have been performed. The client acceptance procedures have been performed. By due diligence, he means this here, that the client acceptance procedures have been performed and we have found this client to be acceptable and we have accepted it. Okay. So if client acceptance procedures are performed, this means the client is good, but this do not mean that there is no audit risk in the client. Okay. Let's come back to the question. I hope that you people are learning from my lecture and you people are getting the maximum benefit. Okay. And I am a person who like appreciation a lot. So keep sending me these thumbs up and good, and you are a great teacher. I love these types of comments. I become happy and I teach more better. Even those who listen to the recordings, I want you all to send me this thumbs up and appreciation messages. Okay, now let's move towards the second risk. Okay, let's move towards the second risk. One student has got serious and he has written, "You are great. Thank you." Okay, let's move forward. So we were reading this first page, which was the partner's email. Okay, I'm clicking on the left side to open these exhibits. Okay, if you people want, I can make it a bit smaller. Okay, if you will close it, then you can see the names also. See the partner's email. We have read the partner's email. Okay, we are done with the partner's email and we are doing the requirement B from it, which is of 24 marks, and we have just completed 2 marks. Now let's move towards the exhibit 2. Okay, let's look at it. I want you all to concentrate. Okay. Sir, please share your number as it's not shown in the screen. Brother, I just shared my number at the very start of the lecture. Don't worry about all of these things. My number, everything, this all will be shared. Okay, so just listen to the lecture and enjoy the current moment rather than worrying about other things. Okay, now let's read this one. The company, now we are on the exhibit 2. Okay, the company was established 15 years ago by Martin Gruber, an engineer who had patented a new type of machine used in the oil industry. Martin, who is the company's chief executive officer, owns 60% of the shares in the company, with the remainder split equally between his brother and sister, Craig and Iris Gruber. Now, this is the point which I want you people to highlight it here. If the company is family owned, please listen to me carefully. If the company is family owned, always remember that there is a risk. Always remember that there is a risk of manipulation. Why there is a risk of manipulation? Because the family will use their influence. The family will use their influence to manipulate the things. Okay. Now, family owned business, yes, it is an inherent risk. Okay. Okay, now one student is asked, how can I ask the questions? You can write on the question tab. I'm looking at your questions and I'm responding to them. Okay, so like the way you wrote the question, the point here, you can write any question and I'm looking at all of your questions and I'm trying to respond maximum of them. Okay. If anyone's question remains unentertained, then you have my number to ask. Okay, now, so yes, one student is identified correctly. Since Martin Gruber owns 60% and remainder of the shares are owned by his family. So yes, there is a risk that the things may be manipulated and they may use the influence and pressure to manipulate the things because there is no independent person to stop them. Okay. The company, so we will write this audit risk, but let's read this company. The company's board of directors includes Craig Gruber as chief financial officer, Iris Gruber as marketing director, and a non-family member, Callie Hayes, who is director of operations. Gruber company has 300 employees, most of whom are mechanical engineers. Now, very important thing, if you will read it here, Martin is planning to sell his shares and retire from the business. Now, this is what you need to understand. Now, since the Martin wants to retire from the business, he will use his influence to manipulate the accounts. Now, one student has asked her how the family can use the influence. Now, a reply for you. See, in Mirchawala of Accountancy, we are 3 cousins, and one is our friend Emma Shafi, and we all are the partners of Mirchawala. And now, if you want to make the accounts, listen to me, if you want to make the accounts, like if the bank asks us that, okay, make some accounts and submit to us. Now, since it is an owner-managed company, I'll ask my admin department that, okay, make this accounts and do as I say. So what do you think? Will he say no to me? He will do what I'll say because it's owner-managed. Now, when the company's owner-managed, there is a risk of manipulation. The controls, the systems are not followed because the owners use their influence to get the things done. And very important, if you look in this question, Martin is planning to sell the shares. Now, who is Martin? The 60% owner of the company. His brother Craig is the CFO. His sister Iris is the marketing director. Now, if Martin will say to his brother Craig that, okay, make some good accounts, I want to sell my shares at a good value, what do you think? What Craig will say to him? He will say, no, I will not make accounts for you. Obviously, he will not say this. He will support his brother. So since Martin is planning to sell his shares, the risk is further increased. The risk of manipulation is very high. The Martin will use his influence and Craig will be his brother helping him. And they both can manipulate the accounts. There is a risk of management biasness, and there is a risk that they can manipulate the accounts. They can take the biased assumptions and they can present the accounts in the way they want rather than what the reality is. Okay, yes, it's an example of weak governance also. So why they manipulate if they have no intention to be listed or anything else? My friend Martin wants to sell his shares. So yes, he will manipulate it. He will manipulate to attract the investor. And even if he was not willing to sell the shares, they can manipulate to attract the bank loans. They can manipulate to save the tax. Okay? Since CFO is one of the owner, is it possible that he does not possess or is not properly qualified? Yes, you can write like that also, that since he's brother, so there can be some the expertise issue also. But my advice will be to think simple. It's a very easy risk, the risk of manipulation and his plans to sell the shares. Okay, so let's go and write this share, the risk. Owner managed business. Now, Gruber Company is owned and managed by Gruber family itself. This creates a risk. That Gruber family, that they may use their influence to manipulate financial statements and use biased assumptions. This risk is very high, as Martin Gruber, who is 60% owner of the company, plans to sell his shares, and his brother Craig Gruber is the CFO of company. They may manipulate accounts and take biased assumptions to show a better picture of company results, so that Martin Gruber can get a higher value of his shares. Okay, are you people getting it? See, it's such a simple risk. No, I don't recommend to read whole question first. I recommend that write it along with it. I don't recommend, because now since the exam is CV practice, it is on the computer. If you find anything new at the later stage of the question, you can just go and add it. Earlier, when we used to write it on the sheet, it was not possible to edit, but on the computer, it's very easy to edit. So it is better to answer the question along with it. Okay. Yes, by assumptions, I can refer unreasonable estimates also. Okay, so Gruber Company is owner managed by Gruber family itself. This creates a risk that they may use their influence to manipulate financial statement. Okay, and use biased assumptions. This risk is very high, as Martin Gruber, who is 60% owner of the company, plans to sell his shares, and his brother Craig Gruber is the CFO. They may manipulate accounts and take biased assumptions to show better picture. I hope that you people are understanding it. Now, those students who are taking this session live have a very good opportunity to ask the questions. And those who are not available due to any reason, or those who will listen to my webinar later on, because now this webinar will help the people even after I die. This is an intellectual asset and which will be available for free. So those who are studying it later, they can ask the question to me on my WhatsApp number. Okay, so my WhatsApp number is available and I'm available to respond as far as I'm available. Okay, so uh, mm, mm, mm. Yes, there is a risk of inconsistent application of accounting policy also. One student has shared a very good suggestion that, sir, if you can separate a time for question and answer, that would be very much beneficial. Yes, I agree. But since it is the start of the webinar and the students will get familiar with myself in 2 or 3 days, we will make it more systematic towards the last 2 days. Okay. Now, let's move forward. We have commented that the business is owner managed, the second risk. Okay, now the company owns. Okay, and then Martin is planning to sell his shares and retire from the business. Craig and Iris, who are younger than Martin, will retain their shares and their board positions. Initial discussion with the potential acquirer for Martin shares began last month. Okay. The company owns a head office and leases a production facility where machines are designed and assembled under contract with individual customers. Typically, an order takes 14 months to complete from the initial design through to installation at the customer's premises. Okay, normally it takes 14 months. Normally it takes 14 months for the machines to be completed once the customer orders. Now there is a risk of IFRS 15 because there will be issue of customer contracts also, because you will construct the machine and there will be a year in between, so there will be issue that how we have to recognize the revenue. So there will be issue of IFRS 15 recognition of revenue, because an order takes 14 months to complete. At the end of the year, we have to calculate the stage of completion, that what is the value of the work which we have completed, and then only we can recognize the revenue. Okay, so you can write a risk of recognition of revenue here. Okay, or what you can do is you can read the rest of the question, you can continue forward, because obviously there will be issues of recognition of revenue in remaining part of the question also, because this is the normal business technique for that. Okay, but if you want, you can write a risk for recognition of revenue here now, and if you find any additional data at later part of the question, since it is computer based, you are typing it, you can do editing also. Okay, so what I will do is I will write the risk of revenue recognition at this point of time. Now listen to me. Now, revenue recognition. Now, Gruber Company's normal business contracts take 14 months to complete. Gruber Company's normal business contracts take 14 months to complete. Therefore, a possibility exists that some contracts may be incomplete at year end. In these situations, in this type of situation, IFRS 15 requires that revenue of the contract should be recognized according to stage of completion. Stage of completion. Now this is very important, that if you are going for AAA exam, you need to have knowledge of accounting standards. Stage of completion can be measured according to cost incurred method or work certified method. Now see, what I have done is that Gruber Company's normal business contracts take 14 months to complete. I picked up the data from the question. I discussed the relevant accounting treatment, that what the accounting standard says in this regard. In this type of situation, IFRS 15 requires that you have to use stage of completion. And that stage of completion can be through cost incurred method, or it can be through the work certified method. Now, a risk exists that management may not be calculating stage of completion correctly, or may be recognizing whole revenue at start of contract. This can misstate revenue of the company. Now see, this was a general risk. Why this was a general risk? See, I identified the issue and I discussed the general problem in the company, that since the contracts take time to complete, I highlighted that they have to look at IFRS 15, they have to look at stage of completion issue, and maybe they are using the wrong stage of completion, or you can identify that maybe they are recording the revenue without looking at stage of completion. Okay? Are you people getting it? Please respond that yes, sir, is going good. If there is any query, feel free to ask me. Okay, now let's move forward. So the first risk which we discussed was first year of audit. The second risk was owner managed business. The third risk was revenue recognition, since the company's normal revenue contracts are of 14 months. Inventory misstatement risk also, yes, you can say that since we will recognize the revenue wrongly, our closing stocks and inventory will also get misstated, yes. Or you can refer the receivable and unearned income issue also. Okay, now let's come back to the question. We have read this first email, we have read this business and governance. Now we are moving towards the third one, which is financial information. I want you all to concentrate on it. Okay, now, so we have revenue. It was $65 million in the previous year. Now it is $75 million. Now, very easy cash marks available in the question. Cash marks, just calculate the trend. 75 minus 65 divided by 65 multiplied by 100. I hope you all know the formula of calculating the percentage change. New minus old divided by old multiplied by 100. So the revenue has grown by 15.3%. Then you will calculate the change in operating profit. You can calculate the change in profit before tax. You can calculate the profit margins also. So I want someone to calculate it. Now what I'm doing is that I'm picking up this data. Now, what you people can do is that you can use a spreadsheet also for this, but normally I don't advise. Normally, I don't advise to use two screens. The examiner allows that you can solve whole of the paper on this word processor document. So try and solve it on the same screen. Yes, you can call them as analytical procedures. Analytical procedures. So what I'm doing is I will create a table, a brief table here. Okay, so the first analytical procedure which I'm calculating is growth in revenue. Then what I will do is I will calculate, just a second. One year is 20x5 and 1 year is 20x4, if I'm not wrong. 30th September 2005. Copy. Paste. Okay. Projected to 30th September 2005. Okay, and this is actual 30th September 2004, if I'm not wrong. Just a second. You people can do typing also, okay? Now, I usually prefer to save the efforts. Okay, everyone is can do whatever he feels good. Okay, so you people can tell me what is the growth in revenue? The growth in revenue was 15.3%. You don't need to show the calculation, you just write the final values. The growth in revenue, then you can write growth in operating profit. Can anyone tell me what is the growth in operating profit? Uh, yes, 10 minus 18 divided by 10, so it will be 80% growth in operating profit. Growth in operating profit is 80%. Then can anyone calculate growth in profit before taxation? Yes, anyone? Growth in profit before tax is 14 minus 9, it will be 5 divided by 9, so it will be 55.5%. Someone please calculate the operating profit margin for me. 55.5%. Now see, these are the cash marks, okay, in the exam. Don't leave these marks. These are the very easy picks, okay. For each trend which you are calculating, you are getting 0.5 marks, okay. These are the marks on sale. Just for calculation, you are getting these marks. Now, so the operating profit margin in 2004 will be 10 divided by 65. I'm talking about operating profit margin. So it is 15.3% in 2004. 10 divided by 65, 15.3% in 2004, and in 2005 it is 18 divided by 75. So it's 24%. Okay. So everyone, I have a question from you people. How many marks did I have got here? How many marks? Everyone. 0.5 mark, 0.5. Someone is saying 5 marks. There is no sale, brother. 0.5 marks for a trend, 0.5 mark for a trend, 0.5 mark for a trend, 0.5, 0.5, 0.5, 0.5. This is 1.5 and 1 mark for the margin. So we have got 2.5 marks. Now someone is asking that, sir, what is the maximum marks? So I have told you this at the very start. For ratios and calculation, you will get 0.5 marks for the trend and 1 mark for a ratio. Maximum 3 marks for calculation. If you will do commentary, you will get additional 2 marks. So let's do the commentary. How do we make the commentary? Very easy approach. Revenue of Gruber Company has shown growth of 15.3% in 20x5. It is an abnormal growth. It is an abnormal growth, and it may have explanations. However, it creates a risk of manipulation. See the approach that revenue has increased by 15.3%. Obviously, 15.3% in 1 year is a big growth. Now, it may have explanations. We will discuss those explanations in later part of the answer, but it creates a risk of manipulation. This risk is further increased. Why is it further increased? Is further increased as operating profit margin has shown abnormal growth of 80% and profit before tax has increased by 55.3%. Okay. Further, profit margins have also increased from 15.3% to 24%. This creates a risk of manipulation. This creates a risk of manipulation. Why? As the Gruber company is controlled by Gruber family, and Martin Gruber wants to sell his shares. Okay. As Gruber company is owner managed and Martin Gruber wants to sell his shares. Therefore, a manipulation or management biasness approach may have been used to show better results. Okay. So if we link it with the accounting standard, will we get additional marks? I don't advise you to do at this point. Just calculate the analytical procedures and make a very simple, brief comment on it. Just make a simple, very brief comment on it. Okay. Now this will give you very easy 2 marks. If there is an accounting issue, comment on it separately. If there is any accounting issue, comment on it separately. Okay, so look at it. What did I do? I calculated these trends and ratios, and then I said that revenue of Gruber company has shown a growth of 15.3%. It is an abnormal growth. It may have explanations, which we look in the later part, but it creates a risk of manipulation. Now, risk is further increased because there are some other abnormal movements also, and we connected it to the Martin Gruber sale of shares. See, what I always say to my students is that AAA is all about exam technique. It is not about how much good you are at knowledge. Yes, knowledge is important. I will say that. If some students say that, okay, sir, I don't know accounting standards, will I pass this exam? Or I don't know auditing standards. Obviously, you will not pass. But the very important thing is your technique. You need to understand that how many marks you will get for each of the point. So, first year of audit, we got 2 marks. Then owner managed, we got 2 marks. For revenue recognition, we got 2 marks. 2, 2, 2. How many? 6. Then for analytical procedures, for calculations, we got 2.5 marks. And then for comment, we again got 2 marks. So, sir, is the comment always supposed? I didn't get your question, the student which asked at the last point. In the comment of analytical procedures, what we do is we identify the abnormal movement and we comment that what can be the possible reason. That gives you 2 marks for commenting on the analytical procedure. I hope that this answers your question, because I think that your question is not very clear that what you are trying to ask. Okay. Now, so how many marks have we done? We have done 6 and then 4.5 marks here. So we are almost done with around 10.5 marks. Okay, let's read forward. Let's look at a few more data of the question. So we were on the financial data. Note 1. Revenue is derived from the contracts involving the design, manufacture, and installation of machinery to customer order. Currently, the company establishes all of its customer contracts to contain only one performance obligation: the successful installation of the machine at the customer premises. Listen to me. Revenue is derived from contracts involving the design, manufacture, and installation of machinery. Currently, the company establishes all of its customer contracts to contain only one performance obligation: the successful installation of the machinery. However, around a quarter of the contracts also include a 3-year support service for the machine installed. Now, I have a question from you people. As per IFRS 15, what is the issue involved here? He's saying that normally our performance obligation includes installation of the machine, but 1/4 of the contracts includes the 3-year support service also. So if you people remember, IFRS 15 says that you need to split the contract value on the performance obligations. The total contract value will be splitted on the machine, and second one is 3-year service contract. The machine portion of the revenue will be recognized immediately when the machine is installed, but the 3-year service contract part will spread over the 3-year period. Okay, listen to me carefully. Again, there is a risk of revenue recognition performance obligation. Now, listen to me. Normal revenue contracts of Gruber Company include only one performance obligation, which is related to design, manufacture, and installation of machine. However, in 1/4 of the contracts, there is issue of 3-year service also. As per IFRS 15, in contracts with multiple performance obligations, Gruber Company should divide the contract value on each performance obligation and then recognize its revenue accordingly. Okay, should recognize its revenue accordingly, like in relation to each performance obligation separately. Revenue in relation to installation of machine will get recognized completely when installation is done, but in relation to service contract, it needs to be spread over 3 years. There is a risk that revenue may not be divided on performance obligations, which can misstate the revenue. I will repeat it again. No need to worry about it. Okay, I will repeat it again. Listen to me. What he identified, what he highlighted here was that normally the Gruber Company contracts are in relation to machine only. Normally the Gruber Company contracts are in relation to machine only. Okay, and then, but he said that 1/4 of the contracts include the second performance obligation also. Now, when there is second performance obligation also involved, what you need to understand is that you have to divide the revenue between two performance obligations. The machine will be recognized through stage of completion because it's a 14 months contract. You need to look at the completion date and everything like that. But for the revenue in relation to the service contract, you need to spread it over 3 years. Okay, yes, you can write about stage of completion also, but we have already covered the stage of completion issue earlier in the previous risk. So what word which I have used here is that revenue in relation to installation of machine will be completed. The revenue recognition will complete when the machine is installed. Obviously, if there is a year end in between, you will use stage of completion. Okay, but we have already discussed this stage of completion here, if you remember. Okay, here our focus is on performance obligation matter. Now, if you remember the steps of IFRS 15, the first step is the contractual right. Then you identify the performance obligation. Then you allocate the revenue. Okay, so this risk is about performance obligation and allocating the revenue. The above risk was in relation to step 5, which was relating to recognition of the revenue. Okay. So we have identified a risk on revenue recognition and performance obligation because the issue was that he wrote that the quarter of the company's contract include a 3-year service contract also. Okay. See, what I'm trying to do is that I'm reading the question and I'm writing down the points along with it. I hope that you people are getting it. Note 2. Operating profits includes a profit of $2.2 million relating to Ergel contract, details of which are given in Exhibit 4. This is the full amount of profit estimated to be made on the contract. The company's CFO suggests that while the company's accounting policy is to use output method to determine the completion stage of a contract at the year end, it is appropriate to recognize the full amount of profit on this contract because the customer has paid in advance. This is a simple misstatement. Even if the customer has paid you in advance, you will record it in unearned income. You will record it in deferred income. You will debit the cash and you will credit the deferred income. You cannot recognize the revenue only because the customer has paid in advance. The revenue will be recognized through stage of completion. The revenue is not recognized on the basis of advance payment. See what he's saying, that we have recognized the whole of the profit of Ergel contract only because he has paid in advance. Is it the right treatment? Is it the right treatment? Please answer me. So obviously the answer is no. It's not the right treatment. Only because the customer has paid you in advance, you cannot recognize the revenue. The revenue is based on the stage of completion. When you receive the cash, you will debit the cash and you will credit the deferred income. You cannot recognize the revenue. Okay. Now he has said that the details are given in Exhibit 4. So let's read the Exhibit 4. 1, 2, 3, 4. Here is the Exhibit 4. Let's read the Ergel contract. Let's read it. In October 2004, Gruber Company entered into a significant contract to design, construct, and install a large piece of machinery for a new customer, Ergel Company. In October 2004, it was estimated that the design and construction of machine would take 15 months. With the installation, okay, someone is saying that, sir, please zoom it. Just a second, because on my screen there is so much things open, the data of go to webinar and everything. Just a second, let me zoom it. We are reading about the Ergel Company contract. In October 2004, Gruber Company entered into a significant contract to design, construct, and install a large piece of machinery for a new customer, Ergel Company. In October 2004, it was estimated that the design and construction of the machine would take 15 months, with installation estimated to take place in January 2006. The agreed price of the machine is $6 million, and Gruber Company will incur cost of $2.6 million in relation to this contract. Based on the project plans, the estimated value of the work certified at 30th September, the year end, is $4 million, and the estimated cost to complete is $1.2 million. As noted in Exhibit 3, operating profit includes a profit of $2.2 million in relation to Ergel contract. Now, if you people remember, he has said that we have included the whole of the profit only because the company has paid in advance. Now, obviously, this is not the right treatment. The company's approach is to use the output method. Now, output method means to use the stage of completion method. The work completion, the work certified. Now, what is the work certified? Now, there are two methods to measure the stage of completion. One is work certified and one is cost method. If I give you a brief revision, in work certified method, we pick up the work certified, the certified value of the contract divided by the total value of the contract. Like if I divide 4 million, which is the work certified, divided by 6 million, 66% of the contract is completed. Second approach is to look at the cost incurred. in which we look at the actual cost which is incurred and divided by the total cost. Okay, Gruber company will have incurred $2.6 million in relation to this, and there will be 1.2 million more. So if we will be using cost incurred method, we will write actual cost in the denominator, and we will put total cost in the we will put actual cost in the numerator. I will repeat it again. If we will be using the work certified method, what we do is we put work certified in the numerator and total price in the denominator. This is one method. Second method is we put incurred cost in the numerator and total cost in the denominator. I will write it down here for if some students have got confused. This is completely different discussion. This is not related to audit risk generally. Now, stage of completion is measured in two ways. Both are allowed. I will add a simple formula. Now, in the first method, which is work certified method, or we call it as output method, what we do is work certified method or output method. What we do is we put work certified at year end in numerator, and we put total price of contract in denominator multiplied by 100. This is one technique. And the second technique is cost incurred method. Cost incurred method. What we do in this, we put actual cost incurred to date, which means at year end, and we put total estimated cost of contract in denominator. But if you look at the question, he has stated it here that we use the output method. We use the output method. So as per the output method, the value of work which is certified at the year end, which is agreed with the customer, is $4 million, and the total price of the contract is $6 million. Okay. One student has asked that, sir, I'm not getting it. So I wrote it here also. I will repeat it again if someone has got confused. Stage of completion is measured through two methods. One is work certified method or output method. You put work certified. What is work certified? The value of the contract which is certified by the customer divided by the total price. And second is actual cost incurred divided by total estimated cost. You can use either of the method. Is it clear? Is it clear now? Okay, now coming back. Now in the question he says that what method we are using? We are using the output method if you look at it. The company CFO suggests that while the company's accounting policy is to use the output method, but we have recognized the full profit because the customer has paid in advance. Now let's start developing the point. Listen to me. Ergil company contract. Profit on Ergil company contract is recognized in full at year end, despite that the contract is not yet completed. This is a misstatement, as in case of incomplete contracts at year end, Gruber company should use stage of completion to recognize revenue or to recognize profit. Okay, now CFO's logic that profit is wholly recognized because payment is received in advance is wrong, as advance payment should be recognized as deferred income, and then it should be recognized or realized according to stage of completion. In case of Ergil company contract, stage of completion will anyone tell me what will be the stage of completion? The work certified is $4 million, whereas the total price of the contract is $6 million. So it's 66.6%. Stage of completion will be 66.67%. Considering this, profit of, you will $2.2 million multiplied by 0.667. Profit of $1.46 million can be recognized only. Due to this misstatement, profit is overstated by how much? 1.46 should be recognized, and they have recognized whole 2.2 million. Is overstated by $0.74 million. Okay, this represents how much of the PBIT. I will repeat it again, so don't worry about it. Okay, don't rush towards the conclusion. My profit before tax is 14 million. If you people remember the materiality threshold, 0.5% of the revenue, 1% of the asset, okay, and 5% of PBT. I will repeat it again, 0.5% of revenue, 1% of asset, and 5% of PBT. Okay. Now, one student is asked, why are we calculating the percentage of completion on profit and not on revenue? Because the answer has majorly commented on the recognition of the profit. Okay. Okay. Yes, the stage of completion is used to recognize the revenue, cost, and ultimately it affects the profit also. Sir, why are we calculating the percentage of completion on profit and not on revenue? I think you are asking about that how did we calculate this stage of completion? Listen to me. The stage of completion, this 66.67% stage of completion is calculated by putting the work certified on the numerator and total price of the contract on the denominator. By using this, we calculated the stage of completion. Once we got the stage of completion, this stage of completion will be used to recognize the revenue and to recognize the cost of the contract. When you will calculate the recognized revenue and recognized cost through this stage of completion, automatically the ultimate operating profit will also be according to this stage of completion. I will repeat. The focus of the examiner was on recognition of operating profit. So I am also commenting on the operating profit. I agree with you people that the stage of completion is to recognize the revenue and it is used to recognize the cost. So obviously the profit will also be according to that same stage of completion. Now, since the focus of the recognition of operating profit, if you read it here, the focus of the examiner was that he has recognized the whole profit of 2.2 million. So what I did was that I multiplied 66.67% of the stage of completion with the total operating profit. And I said that, okay, you can only recognize $1.46 million and rest you have overstated it. Okay. Now you will calculate the materiality. This $0.74 million misstatement and you can calculate the materiality with your revenue, which is of $75 million, and you can calculate it with your PBT, 0.5% of the revenue, and 5% of PBT becomes material. 0.5% of revenue, 1% of asset, and 5% of PBT. So one student has calculated it for us. This represents, just a second, what was it? This represents 5.23% of PBT and 0.98% of revenue. This represents 5.23% of PBT and 0.93% of revenue. Therefore, it is material to financial statements. So I will repeat it again. This was the point where it was a real exam for you, because it involved a complex accounting treatment. Okay, so I always say to my students is that your knowledge of accounting standards is very important. It's 0.9%. Okay. Now, I will repeat it again. What the company has done here is, that they have recognized the whole profit. They have recognized the whole profit of this contract, of Ergel company contract. Now, as per IFRS 15, you cannot recognize the whole profit. You have to look at the stage of completion. You have to look at the stage of completion. Now, they are saying that since the amount is received in advance, that's why we recognize the whole amount. Now, this is not right. You have to look at the stage of completion, and then you have to recognize the profit, you have to recognize the revenue, and you have to recognize the cost also accordingly. Is it clear? Everyone? Okay. Now let's look at how many marks we have done. Now this question was, this point specifically can give us 3 to 4 marks, because we use the accounting standard and we commented on materiality also. Okay, so yes, we are taking the break. Don't worry. So let's look at it. You can get 3 to 4 marks on this because you calculated materiality also. Then this one was an accounting issue, so you can get 3 marks for this also. So this brings, now since we calculated the materiality, so we can get 3 to 4 marks, then 3 marks for this accounting issue. This brings total to 7 marks. Then this explanation, 2 marks, 9 marks. These ratios will give us 2.5 marks. So this is 11.5 marks. Okay. Then this again, revenue recognition issue. You can get 2-3 marks here. So it's like 13.5. Then 2 15.5, and then 2 here. So you have earned about 17 marks till here. Okay, 2 marks for this one, 2 marks for this one, 4. This was an accounting issue, so you can get 2 or 3 marks. So 6 or 7 marks till here. Then these ratios, 2.5 marks. So 2 plus 2 plus 3 plus 2.5 plus 2 marks for commentary on analytical. Then this performance obligation issue plus 3, and this last one, this agro company contract, which was with materiality, so you can get 3 to 4 marks. So we are at around 18.5 marks. So if we take a lower end also, we have earned till around 17 to 18 marks till here. One student is asking that, sir, how did you get 1.46 million? Very easy. The total profit of the contract was 2.25 million. The total profit of the contract was 2.25 million, if you remember. 2.2 million. The total profit of the contract was 2.2 million, whereas stage of completion was 66.7. So it's 1.46 million. I will repeat it again. 2.2 million was the total profit, and stage of completion was 66.7%. So it's 1.46 million. Sir, materiality, is it necessary to comment on type of misstatement like factual judgment? Yes, normally we calculate materiality on accounting matters. Okay. Yes, we can get different marks. We can get different marks on the same revenue issue because the revenue issue was first for stage of completion, then the revenue issue was on performance obligation, and then it was in relation to this contract specifically. Okay. The question number 1 is worth 50 marks. So for 50 marks, you can spend around 1.5 hours. This question is specifically of 24 marks, this part. So your total exam is 3 hours and 15 minutes, which is 195 minutes divided by 100 marks. So you have 1.95 minute per mark. So for these 24 marks, you have 46 minutes to complete. No, you are not required to show working for the calculation. You just give the final answer and you will get the marks. Okay, let's go for a break. Let's take a 15 minutes break and then we'll come back, get some fresh air, get some fresh, and then we'll resume. We are going for break of 15 minutes and then we will resume back. Okay. Hello everyone, let's resume. For the notes after the session, you will get the notes on email. Those who have registered for the webinar, and those who haven't registered, and they will look at the recording. So I will put the Google Drive link on the comments. The video will be available on the ACCA's official channel of Vimeo, and it will also be available on my YouTube channel, so you can download it from there. Okay, so let's review. Yes, there is a WhatsApp group. The coordinator has shared the link here earlier, but maybe you have joined late, so you can contact me on my number after the class, and I will share you the link of the WhatsApp group. Okay, so we are resuming back. Okay, I want you all to listen to me very carefully. Okay, now, so we were on the third exhibit. And we jumped to exhibit number 4 due to Ergil contract. Operating profit includes a profit of $2.2 million relating to the Ergil company contract, details of which are given in exhibit 4. Okay, the recordings will be available on ACCA YouTube channel also. Okay. Now, this all thing can be discussed. You all can contact me after the session and I will guide you people on this. So please focus on what we are studying currently. So for Airtel company contract, there was an issue that the profit was recognized wholly on the basis of payment received in advance. So we highlighted the fact that only because the payment is received in advance, we cannot say that we will recognize the whole profit. We will follow the stage of completion. I hope that you people have understood it. Now we are reading further. I want you all to concentrate. Operating profit also includes a loss of 700,000 in relation to the Johnson contract, details of which are given in Exhibit 4. The loss is determined based on the estimated loss of $840,000 pro rata over the number of months completed on the contract by 30th September 2005. The total loss of the contract is $840,000. Please listen to me. The total loss of the contract is $840,000. He has recorded $700,000 in the current year based on pro rata. Now, if you people remember IAS 37, if any contract becomes loss-making, if any contract becomes onerous, the rule is that you have to record the provision for whole of the loss. You have to record the complete loss irrespective of stage of completion. Now, since this contract has become loss-making, so it is an onerous contract and whole of its loss should be recognized altogether. Okay, let's read the exhibit 4 because he has stated that it is written in exhibit number 4. Let's read the exhibit number 4. Johnson contract. On 1st December 2004, Gruber Company entered into a contract with Johnson Company to design, construct, and install a machine. The contract, which will take 12 months to complete, was initially projected to make a profit of $2.8 million. However, due to cost inflation and errors made in the initial project budget, the contract is now estimated to make a loss of $840,000. Very simple accounting treatment. Very simple. Listen to me carefully. As per IAS 37, the contract of Johnson Company has become an onerous contract. This contract has become an onerous contract, and as per IAS 37, the loss of onerous contract should be recognized immediately. The loss of onerous contract should be recognized immediately. A provision should be booked. What they have done is that they have only recognized a loss of $700,000. They didn't recognize the whole loss. Okay, so listen to me as I develop this contract. This point, the contract is of Johnson contract. Johnson contract. Now, Johnson Company contract has become an onerous contract as it is expected to generate a loss of $840,000. Okay, as per IAS 37, in case of onerous contracts, complete loss provision should be recognized. Okay, Gruber Company has only recognized a loss of $700,000 based on pro rate basis. Okay, Johnson Company contract has become an onerous contract as it is expected to generate a loss of 840. As per IAS 37, if any contract has become an onerous contract, you have to recognize his whole loss altogether and you have to record a provision for it. But what they have done is that they have used pro rata basis, which is not the right technique. This has resulted in overstatement of profit by $140,000 because we should recognize a loss of 840, whereas we have recognized only 700,000. So there is an overstatement of $140,000. Okay, how much percentage it is of profit before tax? Can anyone tell me? Our total profit before tax is $14 million. So 140,000 divided by $14 million multiplied by 100. One student is asking, sir, how will our brain process information so fast? Practice. Once you will start doing practice, it will get clear. Don't worry about it. Okay. So 140,000 divided by 1.4 million. So it is for 14 million. So it is 1% of PBT. If you calculate the percentage of profit before tax, your profit before tax is $14 million. Okay, and misstatement is of how much? It is better if you write the number. Okay, so if I'm not wrong, $140,000 misstatement will be 1% of PBT, if I'm not wrong, because it's 14 million. So it will be 1% of PBT. This has resulted in overstatement of profit by 140,000. It is 1% of PBT, therefore immaterial to FS individually. This issue may get material when combined with other misstatements. Okay, so if any issue is immaterial individually, you always comment that this may get material when it is combined with other misstatements. Okay, is it clear? So Johnson contract, it was a very simple point, believe me. What was the issue? He said that operating profit includes a loss of 700,000. The contract is onerous and the total loss is 840,000. So as per IAS 37, if a contract has become onerous, you have to record the whole loss. Okay, you have to record the whole loss. Okay, is it clear? You cannot prorate it. I hope that you people have understood it. Let's move forward. Note number 3. Profit before tax includes an estimated increase in fair value of Nakatomi building investment property of $2 million. Details are provided about the investment property in Exhibit 4. There is an increase in the fair value of investment property. Now you all know that as per IAS 40, now see, the knowledge of accounting standards is very critical. The knowledge of accounting standards is very important. Okay. Now, the fair value of investment property has increased by $2 million. IAS 40 says that there are two models in IAS 40. One is cost model and one is fair value model. The cost model follows cost less depreciation method, which is like IAS 16. and one is fair value model, which says that changes in fair value are recorded in P&L. So apparently they have recorded increase in fair value in the P&L, which means they are following fair value method. One student is asking, sir, is it important to remember the standard numbers? No, it is not important. If you don't remember the standard number, you can directly write as per the accounting standard. But if you remember the numbers, it would be much better, but it is not mandatory. So let's read the exhibit number 4. In October 2004, following the completion of a significant contract, the company purchased an investment property, the Nakatomi building, for $15 million. The property is a retail development in the country's capital city. The company is going to appoint an expert. They are going to appoint, they haven't appointed yet, to provide a valuation of the property. An initial estimate of increase in fair value of 2 million has been included in the company's financial projections. So you can say that if, as per IS 40, they are using fair value method, the increase in fair value can be recorded in P&L. But there is just a question, there is just a concern. You purchased this property for $15 million at the start of the year in October 2004. And at the end of the year, its value increased by 2 million. Just calculate that how much percent it has increased. If I calculate the percentage increase, in 1 year, the value of the property has increased by 13.3%. What a lovely property it is. So much increase in fair value in only 1 year. It is obviously questionable. We need to think about it. It is obvious. How is it possible that there is such a big increase in only 1 year? It is obviously questionable thing. Okay, now one student is asking, said that can we increase the size of the words? Yes, you can make the screen more bigger, or there is also an option to make it zoom. You can increase the percentage of zoom also. Okay, now coming back to the relevant question. Now I'm writing about the investment property. I want you all to concentrate on it. Now, Gruber Company has included a fair value gain on investment property. Gruber Company has included a fair value gain on investment property of $2 million in year ended 30th September 20x5 in P&L, in its profit before tax, which they use the word. Okay, now as per IS 40, if Gruber Company is using fair value model, then recognizing fair value gain in P&L in profit is correct. Okay, Gruber Company has included a fair value gain on investment property of 2 million in year ended 30th September 2005 in its profit. As per IS 40, if Gruber Company is using fair value model, then recognizing fair value gain in profit is correct. There is no issue in it. However, fair value gain of $2 million is bit abnormal, as it represents 13.3% rise in value of property in just 1 year. Because if you read it, we purchased this property in October 2004, and in September 2005, there is a fair value gain of $2 million. So there is a risk that there may be some manipulation. Okay, now further, this valuation is not verified or is not done by expert, as initial estimate is used currently. Auditors should verify this valuation through market data and expert report when available. Okay, wrong fair value gain recognized will overstate profit and assets value. I will repeat it again. What Gruber Company has done is that they have recognized a fair value gain of $2 million. Now, what you need to understand is that as per IAS 40, the fair value gain can be recorded in profit if we are using the fair value model. However, the important thing which you need to consider here is that it is a very big amount of gain. $2 million gain in 1 year, which represent, now 2 million is not big thing. 13.3% increase is very critical. And currently the expert is not yet appointed and they have just taken their initial estimate. Is it clear? Are you people getting it? Okay. So believe me, I don't think that this is a difficult question. Such an easy question. It is all about following the approach, number one, and it is all about doing the paper with confidence. What you people do in the exam is that you rush, you get frustrated. Do the paper in relaxed manner. Okay, let's move forward. Now what he's saying further, if I go further, note 4, the change in value of intangible assets represents a transaction which took place in March 2005. Whereby Gruber Company purchased some designs from Martin Gruber for $9 million. Now see, the company purchased this from Martin Gruber, and Martin Gruber is the CEO of the company and he is the 60% shareholder. So it is a related party transaction. It is a related party transaction because the Gruber Company purchased these designs from Martin Gruber for $9 million. It's a related party transaction. And then the most beautiful thing, the value of this transaction was determined by Martin Gruber. He is the CEO, he is the seller, and he himself is determining the value. He could have determined it as $90 million also. Who will question him? He is the CEO. On both sides of the table, he is sitting himself. The audit engagement partner asked for the information to support this value, but nothing has yet been received from Martin. So it's a related party transaction, and there is one more risk, which is in relation to the valuation of this transaction. Okay, so let's develop intangible asset. I think it will be the last risk because we completed almost 17 to 18 marks till Ergel company contract before we went on the break. So Johnson, investment property, and this intangible asset. So it will complete our 24 marks. So let's write down intangible asset. Gruber Company purchased a design from Martin Gruber for $9 million during the year. This transaction is a related party transaction as, yes, we will add the risk for non-disclosure, obviously, as per IAS 24. This transaction is a related party transaction as Martin Gruber is a key management personnel because he is the CEO of company and also a majority shareholder. Okay, as per IAS 24, disclosure of this transaction needs to be given as per IAS 24, disclosure of this transaction needs to be given in financial statement. It should include a relation with related party, transaction value, whether it was arm's length or not, and details about amount due. Okay, so all these things need to be disclosed as per IS 24, as per related party. Okay, Gruber Company purchased a design from Martin Gruber for $9 million during the year. This transaction is a related party transaction, as Martin Gruber is a key management personnel because he is the CEO and he is the majority shareholder. As per IS 24, disclosure is required. A risk exists that appropriate disclosure of transaction is not given in financial statement. Okay, it will create a material misstatement in FS as related party transactions are qualitatively material to FS. Okay, so there is a related party transaction. This transaction is material to FS. This transaction is material to FS. There needs to be a related party disclosure. By arm's length means the transaction is at market rate or not. We need to give a disclosure in the disclosure in the related party disclosure. Okay, if you want, you can write one more risk also. This is a material transaction by default. I wrote it. It's a qualitative transaction, irrespective of the amount. Okay, now then what we are saying, listen to me. Further, another risk in this transaction is relating to value of this transaction. Okay, there is another risk which is relating to value of the transaction. Now, what is the risk in relation to value? This transaction was valued by what's the name of that guy? Martin Gruber. Is valued by Martin Gruber himself. Is valued by Martin Gruber himself, who is the seller in this transaction also. Martin Gruber holds influencing position in Gruber Company. Therefore, he may have manipulated the value for his personal gain. Okay, now see, if I am the seller and in the buying company also I am the CEO, so obviously what will I do? I will sell it for 90 million maybe. Why 9 million? And considering the fact that I'm exiting from the company. Okay, so further, another risk in this transaction is relating to value of this transaction. This transaction was valued by Martin Gruber himself, who is the seller in this transaction also. Martin Gruber holds influencing position in Gruber Company. Therefore, he may have manipulated the value for his personal gain. Okay, and the relevant supporting documents are also not given to us. So, if you look at this question, now this exhibit 3 is completed and exhibit 4 is also completed because we read it in parallel. So he asked us to use exhibit 2, 3 and 4 in audit risk. So this was exhibit 2, exhibit 3 and this was exhibit 4. So if you look at this requirement, see, I have scored 24 marks till now. And if you look at it, I didn't rush. Followed a very simple approach. I developed each point, I read each point separately, and I looked at each point in isolation. What you people do is you rush in time pressure, you people forget about things. Now, why does it happen? Because you people don't practice complete papers. Practice complete papers, send it to your tutor for evaluation. Okay? One student is asked that, sir, whether EPS is qualitatively material or quantitatively. EPS is qualitatively material. By nature, it is material. So we first of all made the format of briefing notes. Then we wrote introduction, which was standard, the routine introduction. Then we discussed audit risk, first year of audit, owner managed business, revenue recognition due to stage of completion. We used analytical procedures. We commented on performance obligation issue. We commented on Airedale company contract because the profit was recognized wrongly. Then Johnson company contract, in which there was onerous contract situation, investment property situation. Okay, and then the intangible asset, the related party transaction, and also the risk relating to the valuation of intangible asset. So there is obviously a risk that the valuation of intangible asset may have been done wrongly. Is it clear to everyone? Please, any question, anything? So we have completed the part B, which gives us 24 marks. Now we are moving towards a very easy part, the 8 marks part, which was relating to principal audit procedures. A very easy part, 8 marks. A very easy marks for 8 marks. Okay. Now there is no need to write conclusions. Okay. So just write the introduction, and once you complete the part, just move to second part. Now we are moving towards the third part, which is principal audit procedures to be performed in respect of Nakatomi building, including those relating to use of an expert. Okay, so the first part was matters to be specific to initial audit engagement. We haven't done this part. We did audit risk first, which was 24 marks. And now we are moving towards the part C, which is relating to principal audit procedures to be performed in respect of Nakatomi building, which is investment property. Now, first of all, I will talk about the writing technique of procedures. Okay, I'm coming back in 1 minute. Okay, just 1 minute, I'll be back, and then we'll discuss the writing technique of procedures. Just a minute. Okay, sorry. Okay, one student has asked, sir, if we are talking about significant risk, is it right to write risk on the basis of materiality? No, there is nothing issue like that. You just write the risk in a normal manner. Okay. If you sequence the risk on the basis of importance, then it will create a good impression. But normally the examiner answer also don't do this. So I will say that don't go in additional issues. Even examiner answer goes in a normal form of sequence. Okay. Now we are talking about the principal audit procedures. Now the question is that how do we write audit procedures? So for audit procedures, simple list of advices. Okay. Now, each audit procedure worth worth 1 mark. Each audit procedure you write, you will get 1 mark. Okay. For every audit procedure, you will get 1 mark. Now, how do we write the audit procedure? Okay. Audit procedure is an action. Okay. So it should involve a verb. Now, what do you mean by that? It should involve a verb like review, inquire, inspect, obtain. What is the difference between a procedure and an evidence? Procedure is an action. It should work with a verb. Whereas evidence is a document. So it should include a document name like extract of board minutes. It is an evidence. Copy of bank statement is an evidence. But when we write a procedure, it is an action and it should include a verb. Okay. So how to write a procedure? A very good question. So when you write a procedure, you have to look at few things. First, you write what is the procedure. Like you will write that review purchase documents, review bank statements. First, you comment that what is the procedure. First of all, you will write that what is the procedure. And then you will comment what will it verify. Like for example, if you are saying that review bank statement, this is what is the procedure. Now the next question is that what will it verify? So review the bank statement to verify the purchase price paid for the acquisition of investment property. So when you are writing audit procedure, what you need to understand is that each audit procedure will worth you 1 mark. Audit procedure is an action and it should involve a verb. How do you write the procedure? How do you develop an audit procedure? So the technique is that first of all, you write that what the procedure is. Like you will review the bank statement or you will inquire the management or you will review the board minutes. The second step is that what will it particularly verify? Okay, like it will verify the purchase price or it will verify the approval. What will it verify? Okay, now coming back to the question. In our question, the audit procedures are of 8 marks and they have to be in relation to Nakatomi building. And we have to comment on use of expert also. Now, you all know that whenever the issue is involving an expert, we look at the expertise of the expert. We recalculate his report. We look at his independence issues. So, for 8 marks, we have to develop the procedures in respect of Nakatomi building and including the use of expert. Believe me, very easy part. There are 8 marks, so 8 points will be included. Now we will only read about the Nakatomi building. Profit before tax include an estimated increase in the fair value of Nakatomi building, investment property of $2 million. Details are provided about this investment property in Exhibit 4. So here is the Exhibit 4. In October 2004, following the completion of a significant contract, the company purchased an investment property, the Nakatomi building, for $15 million. So the very first point, this investment property was purchased during the year. So the first procedure will be review bank statement and purchase documents to verify purchase value of Nakatomi building of $15 million. Okay, a very simple procedure that first of all we will review the bank statement. Is it clear? Then, yes, a very good procedure. We will review the purchase title, the title documents to verify the ownership of the Nakatomi building. Review the title documents of property of Nakatomi building to verify that its rights belong to Gruber Company. We reviewed the bank statement and the purchase document to verify the purchase price, and then we reviewed the title documents. From 8 marks, we got 2 marks. Yes, a very simple procedure. One more. We will do a physical verification to verify that the building exists actually or not. Okay. I have written about the bank statement. Now he is saying, just a minute. Now he's saying that the property is a retail development in the country's capital city. Okay, so you can physically visit the building to verify what? To verify its existence and to verify that whether it is a retail development or not, whether it involves retailing activities or not. Okay, physically visit the Nakatomi building to verify its existence and the fact that it is a retail development building. Okay. Now, so we reviewed the bank statement, we reviewed the title document, we physically visited the building. Now let's see it further. Now these are the easiest cash marks. The easiest cash marks. The company is going to appoint an expert to provide a valuation of the property, and an initial estimate of the increase in fair value of $2 million has been included in the company's financial projection. So what we will do is we will review the market data. We will inquire the management that how did they make this initial estimate. We will review the expert report once it is received. We will inquire about the qualification of the expert. We will inquire about the independence of the expert, that whether it is not a family member, one more family member of Martin Gruber. We will talk about the recalculation of the gain. Okay, so there can be very easy risk, I believe. Review board minutes to verify approval of purchase of property and its classification as being an investment property. Okay, obviously the board must have verified its approval. They must have verified that okay, it is an investment property. Okay, inquire management on the basis of initial estimate of fair value increase of $2 million. Okay, what are their bases? Review the validity of their assumptions and compare it with market data, that whether their initial estimate of $2 million, their rationale of estimating this increase of $2 million is valid or not. Okay, now recalculate expert valuation of investment property once the expert report is received, because he said that we have to comment on the expert report also. Inquire about qualification and expertise of expert in relation to fair valuation of investment property. Now these are the routine procedures. How many are done? Review bank statement, review the title document, physically visit, review board minutes, inquire management on the basis of initial estimate, recalculate, inquire about qualification. So I think 7 are done. 4, 5, 6, 7. Now last one. Last one can be very simple. Inquire about selection of expert and evaluate that whether expert is independent from Gruber company. Because if he will be biased, if he is related to in any form with the Gruber company, then obviously his valuation will be questionable. What else you can do? You can review the market data. What else you can do? You can review the other investment properties of the company. And through other investment properties of the company, what you can do is that you can verify that whether management is using fair value method on all of its investment properties consistently. Like they must not be doing cherry picking, that using fair value on one, cost method on one. You should follow consistency. Okay. So I always say to my students that examiner always give you some requirements which help you in time management. These are called the balancing requirements. Okay. Yes, check the subsequent events in relation to the land. Like if it is sold in the subsequent period, then it can be a very good evidence for the market value. Yes, very good procedure. Sir, can we write procedure in relation to gain being classified in P&L? Yes, you can write that we will review other investment properties of the company and verify that whether, and we will verify that whether they are using the fair value method on all of them or not. Okay. So, if I'll sum up this requirement, these were simple 8 audit procedures. If I'm not wrong, review bank statement 1, 2, 3, 4, 5, 6, 7, 8. Yes, there were simple bank statement, purchase document, title document, physically visit to verify the existence, inquire management on the basis of their initial estimate. Okay. Yes, the auditor's expert can also be appointed. That is also a good procedure. Yes, you can review the disclosures made in financial statement to verify that whether the disclosures are complete or not. That can be also good procedure. So there can be many procedures. Okay. Are you people getting it? Okay. So if we come back to the requirements, now in the exhibit 5, we have to comment on the ethical issues and recommend the actions to be taken by our firm. Now this ethical issue part is also very simple. Okay, discuss the ethical issues. Now, so I will stop my today's session here. Okay, what we have done is we have completed how many marks today? We did 4 marks professional. We did 24 marks on audit risk, which brings total to 28. And then we did audit procedures. So we have attempted almost 36 marks. Now 16 marks are remaining. One is these 8 marks, which are related to initial audit engagement. We will look at it. This is not a difficult requirement, but this is one of the requirement which is not very much routine. And another requirement which we have left today is about ethical issues. Okay, so if you look at it, the today's approach, it was not very much difficult. Now, what you people need to understand is that you have to do some complete papers. Sir, will we complete this paper? Yes, in the tomorrow's session, we'll complete these 2 parts and then we will move forward towards further questions. Okay, until and unless you will do complete papers, you will never get confidence. Okay, your time management, your confidence, all of these things improve when you do complete papers and get them checked by your tutor. Okay, I hope that the session has been beneficial. If anyone has any query, I have written my WhatsApp number. You people can ask me there. Okay. In the tomorrow's class, we will move to further within this paper. Once we complete this paper, then we'll move towards one more exam paper. We'll try and complete at least 2 exam papers in these 4-day sessions. Okay. Thank you, everyone. Thank you. Bye.